All right, guys, so now that we went over all the problems that I was facing as a losing trader for 3 years, and I'm sure you can relate to a lot of those problems, let's talk about what exactly I would do if I was going to start over from scratch right now. Obviously, educate. Like I said before, when I first placed my first trade in 2005, I had zero clue what I was doing. I bought the cheapest stock on eTrade.com. Let's talk about education and exactly what I would learn to get started. First and foremost, the most important and crucial thing you need to learn is technical analysis. There's a lot of different ways you can learn this. There's a book, very basic way to get started. It's going to teach you all the basic kind of patterns. Obviously, I also have a course which will teach you more about that below, but obviously that's a little bit pricier. But let's talk about why technical analysis is so important. Now, some people in the fundamental analysis world who looks at, economics, macroeconomics, and obviously that stuff is, a crucial role to be played in the market. But at the end of the day, you can judge what's going to happen in the market and not even look at any of the fundamentals just by looking at the charts. If we look back here on any chart that we're looking at, such as the Dow Jones Industrial 30, basically all this is a picture of exactly how the entire neural network of traders in worldwide money involved in the market reacted under certain situations. And how technical analysis works is it basically looks at past patterns, and then we can take those past patterns, see exactly how people reacted in that situation, and try to set up a trade plan to potentially react to that same pattern that we saw in the past, and then we capitalize that in the actual real time. So let's just take a look at what happened on US 30 here. Prior, we do have this descending channel that has been forming up, and I've made over 6 figures already shorting the US 30 based on this pattern. We came down here and retested these levels, and I'm already bearish on the market after we cross back below the 50-day moving average, especially in the crypto market as well. If we look back at, the monthly chart here on the US 30, this thing has just been going sky high. So anytime you see a parabolic move, it's quite clear that there's going to be a crash, and that's what we're looking at here on the US 30. When it came back and retested these levels, right? I got short here. I got short here. On this pump to the downside here, I made about 40 to 60,000. Also on this drawdown to the downside, I also made about 40 to $60,000 on these trades as well. And the reason why I got short at these levels, when we're looking at these channels, we can anticipate and react to the fact that there is the likelihood and high probability chance that once the price gets back into these levels, which we call resistance, that there's going to be a reduced amount of buying pressure there and then a potential reversal. And then we can get short in these zones and then take advantage of the downside. Now, this doesn't work perfectly every single time, such as me right now. I'm down about $10,000 on this short because look what happened here. This same pattern, once it retested this zone, it did pull back and then it actually skyrocketed to the upside, retesting this zone, which is also called a double top and retesting that resistance level. And now after it broke out this level, it's pushing to the upside. And now we can anticipate and react to this level here thinking, okay, this is a double top and we might see a pullback down off these levels. And in fact, if you calculate the drawdown of each one of these pullbacks, it's the average is 9 to 12%. So we can anticipate that this might have a 9 to 12% pullback off these highs of this level, of which you can see here, I'm currently short here down about $10,000, but we can look to the future after you watch this video, see what happened. Maybe I lost money. Maybe I made, $30 to $50,000 again on this exact same setup that we're looking at. That's technical analysis in the nutshell, of which you can learn a lot more about it. Obviously, I can't teach you everything right now. It's basically just looking at exactly how did the neural network of traders react under certain situations in the past. Then we look forward to the future and say, okay, that similar setup is happening right now. Now we can set up a trade plan based on exactly how the market reacted in the past. All right, guys, the next part that I want to talk about right now, which also has to do with technical analysis, talking about supply and the demand of trading. When you should be trading and getting in and getting out, what the hell should I be doing? The problem is most traders actually get involved and buy or sell in the gray area, which this is an area where you shouldn't be trading at all. Or they get scared and start selling in the demand area when they should be buying, or start buying in the supply area, which is also a no-no because people always react late. As I said before, how important is the emotional discipline? How do you react in high stress situations, right? When the stock prices or crypto prices coming down, people start panicking and start getting all fearful. And this is an area where they should be buying, but instead the fear overtakes them and they decide to sell. And that's the problem. So they sell at the bottom and then they're like, well, what the hell did I just do? And now it's going back to the top. And now they finally, once the price comes back up into this range, now they get all hyped up and have hope. But hope is for pussies, okay? Finally, the market pushed back up and they finally get a little bit of hope that now it's time to buy, but then they buy up here and then it comes crashing back down. So typically when you see any sort of market or asset, it trades in some sort of range between a high and low, and that's what we call the supply and demand of the market. And so typically what you want to be doing is identify those patterns, such as we looked at here on the US 30. This is supply up here. This is demand. You need to understand technical analysis to be able to understand when the supply and demand zones are, and then learn how to have the emotional discipline to be selling up here and buying down here, such as me shorting, and obviously I'm short here now, but it gets a little sticky, but there's also this level of supply up here, which I do believe is gonna come down. That's one of the big problems that people have is when should I buy, when should I sell? You need to understand technical analysis, and this just boils down to having the patience to do nothing during these times and having the patience to wait for supplies areas and wait for demand areas. The last part of technical analysis, guys, is just understanding software. Now, obviously, this is tradingview.com. This is definitely by far the #1 charting platform out there. It's not that hard to understand how to do. It is important. I'm not going to teach you how to do it in this video, but there's probably a bunch of tutorials out there where somebody's going to teach you how to use this. But it is very important that you understand how to use a charting tool. The next is understanding how to execute your trades, of which someone else probably made that video for you as well. In fact, I have a mini course coming out where I will teach you, but it's probably not out yet, such as my broker Bybit that I use here. You need to understand position sizing, how to get in, how to get out, and not fat finger trade, because I've had many different times I meant to buy 10,000 coins or 10,000 shares and I ended up buying 100,000 shares on accident. And that's a big problem because that can turn into big losses. So you definitely need to have a full understanding of how to use the actual platform, such as MetaTrader, where you can see I'm short here. This is through our Hydra funding program, which this one is a little bit more complicated. Never use any of this software until you fully understand how to do it, because it can lead to making the wrong entries and wrong exits and also the wrong position sizes and get you completely screwed over. All right, guys, now the second thing I would have done if I was going to be starting over right now is practice first with fake money. This is a big thing that everyone should do, yet nobody does it. I didn't do it. I was like, I want to make money now. I'm impatient. I got too excited. Like I said in the beginning, I wanted to make money now. The problem is you're experimenting with your money when you have zero fucking clue what you're doing. You're not educated. You have no practice, no experience. And so I definitely don't recommend using real money at first. The pro of this is that this just gives you a feel to understand exactly how the trading world works without experimenting with your own money. And next thing you know, your account's down 50% during your experimental phase, rather than losing a bunch of fake money first, right? And then coming to the market when you finally feel that you have actually understood and learned exactly what you should be doing. And also it's important that you get to the point where you don't have to ask me or somebody else, is this a good time to buy or is this a good time to sell? Now, the biggest con of paper trading or using a demo account like that is that there's nothing on the line. So you don't actually experience all that emotional heightened stress in those heightened states of high volatility where you're freaking out because you're now in a losing position, or you're getting greedy because the position is going good for you and you're wondering, should I take this profit or not? Now, a way to fix that is we actually have a program called hydrafunding.io where we give you a demo account, but you have to pay for that demo account. And if you pass a test in that demo account, such as the rules are, you have to earn a 10% profited account without going into a 5% loss in that account. And for $1,000, you get access to that demo account money using MT4 and MT5, such as we see here. And if you earn that 10% profit in the demo account, you get access to real $100,000 worth of trading capital. And you can also do it up to $500,000 in trading capital. Now, the benefit of this, when you have nothing on the line, you're willing to make dumb decisions. If you actually have something online, you are more serious about it and you actually use proper risk management, and you're scared to lose because you actually have something to lose. So that's the benefit of using Hydra funding demo accounts versus just using a demo account where it doesn't matter if you made money or lost money. So now the third thing that I wish I would have done, and something that you need to do right now, is find a mentor, someone who's been doing this a long time and has a proven track record, and someone that you connect with, whether you're watching somebody's video on social media or watching my video, someone that you connect with and feel like you can trust and actually learn what they're doing and how they are doing it. The difference between reading a book on technical analysis or going and learning all these different chart patterns is that you don't have an edge. Technical analysis, there's nothing special about it. It's common knowledge. What a professional trader does is takes those unique things about technical analysis and spins it in a way that makes it work for them. And they have to do it in a way that gives them an edge over the rest of the crowd. I've figured out a way to actually take money from other people, and I can teach you how to do that in my course below, but it doesn't matter if you go through me or somebody else. Find someone that you feel like you can trust, look at their programs, see if it feels like it's a fit for you, and test it out. But at the end of the day, trying to do this on your own, like I did when I failed for 3 years in the beginning, was stupid. It's a waste of fucking time, and you shouldn't do that. Again, you don't have to sign up for my courses, but find someone else's courses and find a mentorship program, someone that you can trust, that you feel like you can connect with, and learn exactly how they are making money. All right, guys, and the fourth thing that I would definitely get started on right now is understanding risk management. This is where I completely screwed up in the beginning, started betting huge, thinking that games and flicks is gonna be the next Netflix. And this is just the dumbest thing you can do. You need to understand that this is a get rich slow game. And I'm gonna give you some simple rules to follow when it comes to trading and give you kind of a way and a little bit of a framework to always structure your trading and risk management. One is that no trade you make should be less than a 2-to-1 risk to reward. This basically means that you should never risk more than you're willing to gain, and you should actually always have the reward potential double the amount of loss. Now, obviously, this is a little confusing because unless you understand technical analysis, supply and demand, chart patterns, you're not going to know about, well, when should I even enter? That's why, again, you need to learn all that stuff about chart patterns, technical analysis, and have all those questions solved of when should I buy, when should I sell. But just for an example, say if this pattern we are looking at here and we're looking to get short and you entered right here, now your loss has to be half the size of the potential reward that you're willing to risk, and that would be a 2-to-1 minimum. I usually shoot for a 3 to 4-to-1 minimum on my RR, and you should never risk more than 2% of your account on any trade. So for this example, say if you have a $10,000 account, you should never risk more than $200 per trade. Now, how would you set that up when it comes to your trading plan? Again, say if we were looking for a short, if the chart was going in a parabolic move, we thought it looked like a good idea to get short right here. Your entry is here. What you would have to do is mark on the chart, where is your max loss going to be? Where does it look like a good place to actually stop out and be like, okay, this is not going in my direction. Then you take the entry price and the exit price and then calculate, if I can only lose $200, how big of a position can I take based on this $10,000 account? So that way you can only lose $200 or 2% of your account if you get stopped out on that trade. And you should always use either a mental or physical stop at all times. And if you're using only mental stops, you better fucking stick to it. In the beginning, you should definitely always use physical stops so that if you do get stopped out, you don't have to ask yourself, well, should I move the stop? Should I actually sell here? Should I wait a bit longer? Just get the hell out of the position and set a 2% max loss and always a 2-to-1 risk reward ratio. So you're only losing half of what you're potentially going to make if the trade actually works out in your favor. For the fifth and final thing that I would do right now if I was starting over, and something that would have been a game changer for me in my entire career, is understanding longer term market cycles and when to use bull market strategies and when to use bear market strategies. And I'll give you a little bit of a rule of thumb that's just in a very easy way to identify the long-term trend of any asset you're looking at is just simply looking at the 50-day moving average. If we look at Bitcoin here, obviously once it broke above the 50-day moving average here at the end of 2020, we went on an epic bull run, of which this is when I made about $1.7 million in the markets until I called the top here, sold all my longs, got rid of my positions, and started using bear market strategies once we flipped over the 50-day moving average. And now I tweeted about this, made YouTube videos about it. Everybody did not want to hear that because everybody wanted to constantly believe that we're always going to be going up and this thing is never going to stop and we're going to 100,000. Obviously, it did retested back up on these levels, flipped back over the 50-day moving average here, again here, and then back up here. I called the top again and said, guys, this is a bull trap in the markets. Get out of everything. We're about to dump and we're going much, much lower, potentially 20K and below. Guess what happened? We flipped the 50-day moving average, and now it is time to now flip to bearish market strategies, of which I teach in my other course, Decrypton, which teaches all about how to short stocks, short crypto, use the Krypton strategies in a bear market and not get greedy and lock in gains along the way up, such as my trades on Block, Wild, where I'm making $40,000 to $60,000 on those trades before they actually come back down and is absolutely eat shit. We'll just take a look here at Block in the middle of a bear market here. Look at Block just completely coming down. down. We took advantage of what we call a revival pattern here, got in, got out up here. Remember what we saw in the gray area when people are starting to buy in the actual supply zone is stupid. You need to be selling up there. You need to be buying down here, exactly what we talked about over here. Always be looking to buy in demand zones and sell in supply zones. Most people don't understand that. We got in, got out, made $64,000 on block. And a simple rule of thumb to be following when you're looking at any chart or any asset when you're trading is just simply looking at the 50-day moving average and then figure out what are bull market strategies, use those when we're above the 50-day moving average. What are bear market strategies, use those when we're below 50-day moving average. Again, I teach both of those in Krypton and Decrypton in the link below. So anyways, guys, almost 20 years later, I'm still doing this, still having a great time. I've traveled all over the world, got locked down in Bali during COVID, now building my dream home there. And it's been quite an epic journey, I will tell you that. And there's a lot of money to be made in the market. Don't get too excited about this because you're not going to get rich quick. And even if you do all of a sudden get rich quick, the exact behaviors that you did to do that are eventually going to lead to your demise. This is a get rich slow game, just like everybody else gets rich in the world out there as well. Want to know who gets rich? People who do it slow and people who do it smart. You see somebody with a stupid fucking Lamborghini that they bought with the subscription money. Again, guess what? I've also made millions of dollars selling education, selling my alerts. I'm not going to sit here and lie that I didn't, but I've also physically made money, millions of dollars trading, of which I've proven and shown time and time again in my 20-year career. If you look at a lot of the other people, guess what? They're not showing you any of those things. They're just talking about all this bullshit and shoving a Lamborghini in your face. But with that said, like, comment, subscribe. And if you want to learn from me, I do have links below for my Wolfpack Telegram group where you can come and watch me trade every day live, where I give you all my alerts, but you should never follow any of my alerts. It's simply an illustration of everything that I teach in the courses. This is not something where you're going to come and copycat trade. There's no such thing as copycatting a trader. You have to become a pro yourself. You have to be able to answer those questions of should I buy here and should I sell here? With that said, that's a wrap. I'll see you in the next one.